everybody's commenting brokers are making 50% profit
That's
margins.
what every
No,
dispatcher and
I
trucking company
don't.
thinks.
No, I can definitely say that we have not seen anybody. No,
Yeah.
no.
It's like once in a blue
it's
moon, it makes sense, but it's
yeah,
not
maybe.
something.
Well, here's one other thing I'll say. There's also brokers that take it on the nose too. Like they take it in
Exactly.
Oh
chunks
yeah.
where just to keep their
Yeah.
customer happy. And we actually account for that. Like we have a way in our software where like if you have to do a certain number of negative margin loads, we set thresholds because that's just something that sometimes brokers have to do
Yeah.
to satisfy their customers. So
Sure.
they may move 3 or 4 loads and one of the loads wipes out the other 3.
Yeah.
Yeah.
Because otherwise they
we
lose the
had to
customer, right? So
we had to
yeah.
take it today too. I literally deadheaded a truck 250 miles today because I'm like, there's no way I'm hauling a cheap load. Dead ass. I'm like, I'm not hauling this cheap load because as soon as I do, the brokers will think this is normal. The customers, the shippers will think this is normal. So I'm like, I literally
Where was
deadheaded
that
it
from?
250. It was Albany, New York, going to Rochester, New York.
Gotcha.
Got it.
I was like, it was like 250 miles. He was a little bit east of Albany. I'm like, there's no way I'm gonna take a $450 load. It will cover my fuel, it will cover the tolls, but I'm like, it just doesn't make any sense. He'll waste the whole day. Plus, I'm like, now the brokers will know that's normal to book that kind of load. So
Let's just first introduce Steve Kochan, the CEO and founder of ComFreight. What's going on, Steve? How are you today?
Yeah, nice to hang out with you guys. Paul.
Yeah, it's good to
Been
have you.
fans from afar on social media for probably like a lot of people, so this kind of cool.
For sure, definitely. Bob, you're gonna say something.
yeah, no, I was gonna say, Steve, if you want to kind of introduce yourself a little bit, tell us a little bit of your background, tell us a little bit of what you do. That way, people and our followers, and our listeners can understand exactly what you're doing, and a little bit about
absolutely.
yourself.
So yeah, I'm the founder and CEO of ComFreight, which originally started as a load board, and now we do factoring, and we're moving into payments for the freight industry. I've been in and around the freight industry since 2008. I actually started my career. I had a couple small businesses while I was getting my bachelor's degree, but I've actually started my career in the supply chain and freight world at C.H. Robinson. So don't hold that against me.
Oh wow, okay.
But that's
No
actually
way,
where
that's
I
pretty
started.
cool.
Yeah, and then
Hey, C.H. Robinson is actually a pretty good company. Like right now, I feel like it's pretty good.
It is.
So.
Well, yeah. There's been some others that have come up that have been kind of. They used to be like the biggest dogs on the street,
Yeah.
especially. But yeah, so I kind of
Okay.
got thrown into a pretty big logistics company and got a pretty good crash course with everything. And yeah,
So you
after
kind of
that,
started there as a broker, or just you were like loading loads?
Yeah, so
or?
I was an account executive actually. So I was an account
Okay.
manager, I was an account executive. So I was trying to stay on the shipper side. And it's actually interesting because I was actually there when they started this. They had just started to kind of move away from like a single trading floor style brokerage where they were actually experimenting in 2009 where one branch, like let's say in Orange, California, was going to be just carrier sales. And then one branch where we were at, which was actually like a newer branch in Long Beach at the time, was just going to do customer sales. So you would actually use the software to they'd be these auto assigned reps for booking the trucks at another branch that's not even in the same office, like somewhere in the region. Yeah, so I think they continued on with that, but they still have like what's like composite or hybrid branches in their model, as far as I know. So that was kind of interesting because I think when I first started though, I was basically doing collections. That's how you get hazed in, I think, at Robinson, is they give you a stack of invoices.
Oh wow.
Like, hey, we haven't gotten paid on these. Start calling them. So that was the first couple of weeks.
So that's
and then yeah,
like that's how you got into like the payment stuff, right?
Yeah, right away,
right? Yeah.
Right away, it was like, oh,
so
man,
was it was
sucks.
collections from the shippers, right? Or the actual customer?
Correct.
That was that you were trying to collect the money from. Okay.
Yeah, most of our customers there were shippers. We had a few like freight forwarders and a few steamship lines that did a few things with us, but but mostly it's direct shippers. So, calling through
Okay.
accounting departments and so that was the first couple of weeks. And then I had to book team trucks. And most of the team trucks we booked were strong solos back then. So,
Exactly. Strong solo Sergeys.
yeah, man. Yeah, exactly. So, and then it was funny because we had this one account that that when we'd send the truck in, they would put trackers on like every other truck, and they just did like LA to the southeast, right? And their whole thing was like they do like Friday to Monday. So I was still a little like new and wet behind the ears, and I didn't know too much about like fake teams and all this stuff. I'm like
Yeah.
maybe a month into the game, right? And it was just funny because they started like the guy would call me and blow up like, hey, we've been telling you guys to stop sending us solos, because the guys would show up there with one guy in the truck and be like, no, I'm gonna pick up the other driver on the way out of town, like just right down the street.
Yeah.
Of course, that's a classic
That's literally
excuse.
the common thing. Oh, you
Yeah.
said team? I thought you said your driver was Tim.
Yeah, right.
So
Yeah. So
we
anyway,
had
that's kind of how I started. Yeah.
we had a warehouse in Franklin Park when I was a broker, and we would have like, it was funny because we were a broker and we also had a warehouse. We would ship stuff out of the warehouse. So typically when you sell a load as a broker, you don't have access to the driver. You don't see that driver. But we had team loads, and we would have like a driver show up and be like, yo, this is a team load. And it would always be an excuse. The excuse was like, my driver's taking a shower at the truck stop nearby.
Yeah,
We're gonna
exactly.
go pick him. We're gonna go pick him up right
They
after.
got wilder and wilder excuses,
Yeah,
but
but
then
honestly,
the tracking started, and I was like, all right, now I get it. Like, I've got to find you guys real teams, and started to figure out questions I could ask on the carrier side. It's still
yeah.
good luck,
Yeah.
right? Sometimes you're gonna
But
get
most
those.
shippers, honestly, you show up there, most shippers don't care. It's only
Yeah.
very specific people where they're like require team. They need 2 CDLs there to show up. It's like so specific. But even when you need 2 cell phones, honestly, what carriers do, they just put a different cell phone, like one of those
Yeah.
Walmart cell phones, and then they
Right.
just track it through that. It's a common thing in carrier.
Yeah, it was so that's kind of like, and then I slowly started working my way into managing some of the key accounts, and a
Okay.
lot of them
So after
were
CHR, did you go to anything else that was logistic?
yeah, I worked at a couple small like startup freight forwarders in like the LA area, and I did some international, so I got some experience with that. I helped set up a whole the domestic freight operation for a freight forwarder startup, because they needed that just to satisfy some of their accounts. I mean, these are really small operations, right? Like, 3 to 6 people trying to get to 10 in like the next couple of years, kind of almost like family run. They're just servicing like
Yeah.
certain apparel clients and stuff. But there's a lot of that in the garment industry in LA, for example, or certain other niches, stuff like that. So so that was a really interesting experience, because it was kind of like going from Robinson, where you have like the best software, like quick pay available on any, T-checks on any load, and
Yeah.
you can blast these out to other branches in different regions, and they'll cover the freight for you. You have to just share on the margin. Went from that to like, okay, you've got Excel and a phone, right? Like get to work. And then like which load boards even work. I don't know if you guys remember, if this might be before your time, but there used to be a load board called Get Loaded. And that one actually, so yeah, it was probably right before you guys I think they got bought by DAT eventually. But that was actually a pretty slick one. They kind of remind me of like Direct Freight from the user experience. So they were a little easier than like maybe DAT's user interface like 5 or 6
That's a
years
good
ago.
name
So
too. Get Loaded. That's a really good domain name. Honestly, that sounds really good.
That's right. It's kind of funny too, right? So
Yeah, it is.
that one was pretty helpful. But yeah, I was trying to figure out like what can I patch together to kind of make my life a little bit easier when I'm working at these smaller groups. And it was like multiple different load boards, manually logging into the portals for different LTL carriers where we had some kind of base rate set up with them, so it was definitely not an enjoyable experience. So that's kind of where the whole idea for like trying to put together a better load board actually kind of came from. That was the contrast of working in a big company like CH Robinson. You have all the resources, all the best technology, and then going to like a startup freight broker or forwarder, and being really limited in what you could do, and the kind of resources that you had.
I feel like that's what's so cool about actually going and working for a bigger company or like a bigger because you see, like for me, from my side, right, when I went to work, because we started with my brother on the trucking side of it, and it was like we're literally grinding, trying to learn everything by ourselves, and like then when I became an owner operator, at least onto a bigger company that had like 60 trucks, and I could see the different things that they were using, and I was like, only if we had this at like my brother's company, or like only if we,
Right.
I feel like you can learn so much things, and I feel like your mind kind of expands when you actually work for like a bigger company. So it's kind of cool to see that when you were working at CH, you saw this, and then at a smaller one, you saw kind of like, hey, this is what's needed. But yeah.
Yeah, exactly. And the first area that so I did that, and then I did a little bit of consulting for some shippers, and again, all in LA area.
Uh-huh.
And then it was kind of like, okay, that kind of started with the bidding area. That's where we kind of started to dive into, or I wanted to dive into. So at this point, it's just really me working on the project and just trying to put together a website where you can kind of do solicit bids for the freight, right? So I've
Uh-huh.
got a couple like old YouTube links so I can actually prove like, man, I was one of the first ones doing this, but I was
Oh
just
well.
bootstrapping. It's just me trying to use what's left of my consulting fees or my paycheck to kind of keep the project going and get it started. And this is back in, I want to say the end of
Huh.
2012, beginning of 2013. So when I
Okay.
registered the business and started trying to put a website together. Yeah, and that was the first point we started at, or I started the company as a project on was, hey, how can we make the bidding process more transparent and easier? And you guys probably you've heard, bid it or book it now is like pretty prevalent in the
Hmm.
industry, but that was something where I was trying to
The
figure out a way
button,
to do.
like book it
Yeah, just
now.
a button
Yeah,
where you could just book it now, but even on like a load board, right? Where some of the
exactly.
loads, even
Yeah.
some load boards, you can actually just book now at a certain price and it'll at least like, lock in a potential tender or tender at that point in time.
Yeah.
So
So
it was
you're
part,
way ahead of your time.
yeah, I just
I
didn't know
mean,
what
of
I didn't
the
know how to
industry.
start a business yet, right? Really, like a real business. I had like small businesses before and like I said in college, but like I didn't understand like, man, this is a really expensive endeavor. It took me years to kind of keep bootstrapping, and then like people were coming to me and be like, hey, like we want to invest in you. Like, and I was like, what is the
Oh
oh
well.
yeah, that's right. This is actually like a pretty legit thing. And started to put the pieces together that all right, this is pretty serious. I should try to get more serious with it. And but yeah,
Yeah.
we did really focused on the website was really like you go on, you put a load up, brokers and or shippers could come in and place bids on it. It didn't force a reverse auction, so it wasn't like forcing a race to the bottom, but you could basically like counter bid and also like message through it. So you could ask questions and people could respond inside the website. We still have that functionality, even the latest version of our load board. We still have the load board. So we've kept some of the original features. But that's kind of how the company started, and then we eventually just became more than just me in a studio apartment and was able to raise some money and we kind of pivoted from there and moved into the factoring part, and now we're moving into more payments and true fintech, financial technology for the industry.
Steve, could you tell us when you like? I guess so. You started the company in 2012, and then can you kind of give us like a
20
background, a
yeah, I think
timeline?
I drew the logo in 2012,
Okay.
not knowing exactly what I was going to do, just knowing I wanted to start some kind of project trying to like freight technology. So like you see that little diamond, I actually drew that in a notebook. I have that somewhere
Okay.
Oh well.
back then. Yeah, and then started thinking of different names. And at that point I thought maybe it would be the name of the consulting firm, and maybe I'll do more with that. And like I knew I wanted to do something, and I wanted to do something with technology, with the freight industry. So 2013
Sure.
is actually when I registered
Okay.
business and started, got the first website out and decided we're going to do something with load boards and freight, like a freight marketplace.
Sure.
Um,
Oh well.
so that was really from 2013 through 2016, almost 2017. So midway through 2016. And yeah, it's pretty much like most nights and weekends. I ended up picking up a job at a digital marketing firm,
Hmm.
so I could get more experience
And marketing.
managing software developers. Yeah, and
Oh,
also
okay.
digital marketing. Yeah, so I basically managed a team of like four web developers. I think five towards the end. I think it was the total team, as like a technical project manager. So we were doing like lead gen, like websites, landing pages. So that was really cool because I could kind of play with experiments I had with that and then go back with the business I'm running on the side, so to speak, and see what worked. And I got pretty good at like improving conversion rates on like the load board sign up pages and trying to get like more and more
So when
users off of social media and stuff like that. It was
okay.
yeah,
So
that
that's
was
what
kind
that
of
was my kind of what I had a question was when you guys launched it, was there a specific way how you kind of were like, okay, how do I get this product out to, to brokers and to carriers? Was there a specific way how you were looking at it or how you
yeah,
were
back
marketing it?
then I was just brute forcing it and like you could get away with a lot more on LinkedIn. So I was just like mass adding people on LinkedIn and just trying to
Oh
get
wow.
them to like sign up or try it out and then getting like feedback. And then the people would use it a little more than others. I'd like try to sit down with them for like a longer call or discussion and get the feedback on the product and like what worked for them, what didn't work for them. So I think in retrospect, I was probably trying to do too many things with too little resources too fast.
Hmm.
But it was
hustling.
really yeah, but it was really fun and kind of learned over time while I was trying to just bootstrap, kind of build this thing on my own. Where I wanted to take it longer term, make it really a more of a bigger company, a real corporation, and really start to grow some real revenue and a legacy for the company. So that really didn't happen until about 2017, and that's when
Okay.
got the first investment. We pivoted into factoring with a longer term vision to do payments and this whole financial platform.
So can you tell us more about that pivot? Because you're essentially doing this as a side hustle until 2017. And then what happened? Like an investor came to you and you're like, all right,
Yeah, it's
it's time to
funny
bring in an
story. So
investor.
yeah, right. So I'm still working at the agency, the digital agency, and I'm getting these guys hitting me up from Canada, and I can't remember if there was an NDA or how long it lasted. I'm not going to try to say where they're exactly from, but it was just interesting because they're like it was pretty well. It was like they're pretty wealthy people in Canada that know the
Uh-huh.
supply chain, and they're like, "Hey, we saw you," because I was experimenting with like little press release things, like
Okay.
subscriptions to different like just really scrappy, and like one would hit and then get picked up by like Fleet magazine or something, and you know what I
Cool.
mean? And like, so people would go to the website and be like, hey, like, we were thinking about building something like this, and you already kind of built it. And they're like, you built it how? How did you you have
Yeah.
investors? Like, yeah, that was kind of cool. So it just started to get me thinking, like, I was thinking about going full time with it, but hadn't really thought through like, what would be really meaningful as far as a business model. And at that point in time, around 2016 or so, Convoy was getting going. Cargomatic had just raised a lot of money a couple of years, I think a year or two before that. They were like the big, so like
Mhm.
digital freight brokering was becoming more of like the venture backable project, where like subscription load boards was still, I think, and probably was still correct about this, was just really difficult to break into at that point in time. Like that and truck stop really at the corner of the market in different ways, and all the other load boards almost still like it is to this day are just really like little niches in certain areas or have been kind of rolled up
Yeah.
or absorbed along the way. So I
Mhm.
think I think in even retrospect there, I think I made the right move. But more importantly, I was asking our users, hey, what else do you have like challenges with? At this point, we had a couple thousand subscribers, almost a couple thousand, I think, at that point, paying subscribers
What
on the
was
load board. I
your
think we were charging like
RR
25
on that?
bucks a month or something like that.
Oh well.
Okay.
Yeah.
Do you know your
Yeah.
numbers on that, Steve? Like what was your monthly recurring revenue? Just out of curiosity.
I think right before he jumped off, it was around 30 something.
And that's when the
I might
investors
be.
came in. Uh,
Well, they started getting approached without me soliciting
yeah,
anybody,
yeah,
basically.
for
But they
Oh
sure.
didn't
well.
know our revenue. They just kept seeing us pop up, and if they're looking at the feature list, I'm sure they put a fake account in or something. Or like, hey, you guys
Yeah.
already built this thing. We want to build something because they're starting to probably see money flow into the industry for FreightTech. It's just starting right around that time, 2015,
Hmm.
2016, just barely
Hmm.
as far as I'm concerned. So then, thought about it. I ended up not wanting to take their offers, have to move somewhere in Canada. I was having the time of my life in LA at this point in time, and I was like, and the revenue is decent. I was like,
Oh yeah.
Just wasn't enough to make me drop and move. Let's put it that way. Um, so I thought, well, how much more can we do competing with like trying to compete with Dad or Truck Stop, and like, is there a better model or business model, or is there something else that I can do to kind of help the users with challenges? So I talked to the users, right? So it's getting back to like we had a couple thousand, almost a couple thousand subscribers at that point. So I talked to some of the paid users. We had like a freemium models at that time, so like you could use it, and then a certain amount of time, certain features would lock. You just talk to people, and next biggest challenge that continued to come up was credit and payments. So especially on the carrier side, it was like, hey, look, we feel like it's a necessary evil to work with some of these kind of old school factoring companies and finance companies, and it's just I wish there was a better way. And I didn't see anybody trying to do anything with factoring or fintech at this point, right? I mean, there's some of these legacy larger like cash payments, and some of these guys that do like these kind of corporate payment processing services that come with a bunch of freight bill audit, and that's a whole different thing than, okay, how can we kind of help the small to mid-sized companies with a better way to pay and then to get paid. That was like the broker side that we wanted to get into. So that's really what I pitched to the first set of angel investors in end of 2016 going to early 2017 was, hey, we've already built this load board. It's really just me and a contractor here and there at this point. So want to raise a little bit of money and build a small team around this, see if this really has some legs, and see if we can make a better factoring experience, but with a long-term strategy to actually becoming like kind of a hub for financial decisions and payment processing solutions for that kind of mid-market for the industry.
Okay. So you ended up raising.
So at that,
you ended up raising venture. From angel investors.
Angel investors, yeah.
2017,
so smaller,
and ended up pivoting to factoring, keeping the load board still there.
Kept the load board. Eventually, the revenue from the factoring within about a year and a half was exceeding, excuse me, the subscription revenue. We ended up opening up a lot more of the features for free. I think right now we still have 1 or 2 features behind the paywall just to kind of incentivize people that are using the load board to try to upgrade or come over to use HaulPay, which is the factoring payment service. So that we unlock those features for free. But we kind of just slowly kept opening up the load board over time because it just made more sense to make that kind of like a loss leader product.
Sure.
And basically, initially we worked with a partner company where they were doing the factoring. They were doing like the servicing and providing us line of capital that they had. And then after a little bit of time, I was able to arrange our own kind of capital sources. So we could use our own kind of capital with a capital partner rather than partnering with a third party factoring company. And then after that was in 2019, after that, we were doing it all in our own books. We've been doing it pretty much since 2019 with our own funds and servicing carriers, and then moved into brokers in 2020 pretty heavily. So
at first you guys just started factoring just for carriers with the brokers, right? Like that was your kind of main,
it's still pretty much the same process. It's like you come in, you upload POD, you put in the amount, and you select the company you want to bill. We create the invoice, and then it gets processed to a paid status, usually within the next business day. Pretty much the same process we had then. Then that was definitely collecting, I'd say 90% of the time, we're collecting from a shipper on those, from a broker on those invoices. Brokers are moved, the freight's getting moved by the carrier for the broker, and that's where we're getting paid by. But yeah, now that we're doing more and more with the brokers, now we're collecting more and more of the invoices. It's kind of flipped the other way around. 90%.
And that's difficult. That's a lot more difficult than collecting from brokers, isn't it?
So it is, I think it is to some extent. I think the other consideration is if you think about a broker, you're kind of going off whatever broker reported payment history there is out there. But when you can see who the broker's working with, you can get more into like what the real credit risk really is, right? So it's kind of a trade-off. It's, like since we have broker clients now that are growing and more coming on board, if they're using us for factoring, we do see who their shipper customers are. So think about it, right? If you have a broker and somehow you got a credit line or loans, you could pay your invoices fast for 6 or 8 months, but all your customers could have, not the best credit.
Yeah.
And then you all of a sudden your payments terms start slipping and you start paying slow. So it's the bigger, more established brokers would still move the bulk of the freight in the brokerage spot market. They have such good margins and they have pretty good balance sheets and a lot of cash. It's not as much to worry about. But I actually see it for us. It's kind of an interesting place to be because when you do have that insight, you can actually almost be de-risking the business even more because actually who the broker's end customer is now.
Sure.
Not just who that broker is representing themselves to be.
Yeah. I mean,
so you see the whole side, basically. You see what the actual shipper paid. And then we had a lot of questions. What's the profit margin?
Yeah, we do. And one thing I do want to point out that is like really, my head of ops was reminding me to say this, like we take like data and being objective really seriously. Like at no point in time since like in the story arc for the company have we ever been a freight brokerage or been a carrier or have gone in and out of. We've always been a technology company. And now we've kind of had this factoring business that's now kind of evolving into factoring plus like other types of payment solutions. So I think it's good to note that because it's important for, I think, anybody who's running a business, especially with all these different freight tech companies and all them merging and doing deals and all these different things, to know, hey, who is my financial partner? Who's my data provider? Who, just be mindful of that because there are some companies out there that are owned by carriers that are competing with you. Actually, at the same point, they're financing you and getting access to a lot of your data.
RTS has Ryan's
like
Transportation
that, right?
Services, which is like huge of a brokerage. So they essentially like they have all the information essentially. Because Bob uses RTS, and when you send him a rate con, they know exactly what that broker, what the lane it is. I mean, I'm not sure if they're sharing that data because I have no idea like how that works.
Well, that's a whole nother like black hole of who knows in the industry. But I mean, for us, it's like we try to really we also try to be nice. We're not trying to poison pill anybody, but without naming any names, just good to be conscious of what kind of business they're running and what data rights they may have or you may have signed off on.
Sure. And from my perspective, collecting money from shippers is a lot more difficult, mostly because of the days to pay. Like, Bob, I don't think you realize this. Maybe you do. But so like brokers have to pay legally 30 days. Typically, that's what the contract typically says.
Usually standard terms. Yeah.
And like all these enterprise shippers, like Anheuser-Busch, whatever large shipper that you work with, they typically pay like 90 to 120 days after receiving an invoice. So I remember when I worked at my previous brokerage, they weren't set up with any factoring company, and that cash flow strain was massive. Like my boss was stressing out, waiting for the checks to come in from Anheuser-Busch. And I remember like one day, like it was like $500,000 just of a check because they actually, and on top of that, they mailed the checks physically so that it takes longer for you to cash it. Like that's how absurd it was. And
these are all things where we deal with like weekly or daily for sure.
That's tough because there's obviously a lot of factoring companies that work between carriers and brokers. And I know when I started a brokerage, no one wanted to set up with me. No one was like, "Oh, Paul, we're going to factory loads," and I needed that setup so I could have cash flow. If you don't you don't realize how much money you need sometimes for the cash flow of brokerage, especially in the beginning when no trucking company wants to work with you because you have no credit score. And so this is like essentially like this would have saved my life. This would have saved my brokerage if I had a partner that could actually factor my invoices. Because most people don't do that, and it's tough because like you're chasing money from shippers, which is in my eyes, a completely different ballgame than chasing money from brokers. So could you tell us about that, like the whole system of how that works?
Yeah, absolutely. Yeah. And yes, and that's like I'll touch on what you mentioned about like going back to my roots, right? Like seeing like, hey, like I just remember like, man, it was nice to have that T-check, like any minute of time I needed a carrier, like, hey, I'll give you a free quick pay, right? And like they'd be like, all right, where do you want me to pick this load up, right? Like that versus not having access to that kind of capability, right? So that again, all that stuck to my head was another part of the reason for the pivot, right? Like, can we take these things and put them together? So yeah, the way it works, I mean, we digitally invoice all the shippers. We have our own proprietary process that we follow. A lot of it's through email reminders, stuff like that. We've kind of fine-tuned it for years now, from starting with the broker side and then kind of moving into shippers. But we also have our own software that we built that helps us manage the credit risk with those shippers, right? So we can set what terms that they express to us, or what terms they confirm. We can set up, we have like a set of like a bunch of these special rules that we can configure, even all the way down to a specific shipper account basis with us, that will help us make sure that the invoicing is almost entirely automated and done in the way that they require, right? So a lot of the invoicing delays come from, I mean, let's say a lot of it's BS, right? A lot of times, sometimes folks will use that as an excuse, but if you don't hit just that one right thing and that's required for billing, then you're good. You're gonna wait for a check, or you're gonna wait for something a little bit longer. So we've gotten really good at that, and just coding that into our software so that as we set up each shipper in the system, we have these presets and settings we can kind of work out. So like make sure the invoicing process is handled as close to exactly as the way they want it or need it to be done as possible. That helps us shrink our days to pay down on our portfolio, which again, if it stretches out for too long, we're not really making that much money, right? Because that money's just floating out there and we're not getting it back in the door to keep buying more invoices or financing more payments. So that's the short answer, is really the software is what we've leveraged to do that well. And we've done other things, like we're looking at other possible things we can be doing. Like you talked about cases where the shipper is going to pay like 120 days or something like that. We have experimented with ways where we can still finance that, but maybe we do it at a slightly different rate and just for that specific case, right? So instead of a hard no, it's like, okay, well, we'll do it, but you're going to pay a little bit more on the discount or something like that. So the idea is we've tried to make it as flexible as possible, and there's a lot of different settings because there's so many edge cases. So we tried to figure out the ones that are most repeated and kind of build that into the software to help us do that well.
So in plain language, I have a question. In plain language, because I feel like for me, it's hard to, because I'm not on that side of it. So say I'm a broker, right? And I have a shipper. Like I had a warehouse here and I was getting loads from this guy, actually, because this thing actually happened to us. And instead of me billing him directly and then waiting that, 60 to 120 days, I reach out to you guys and I'm like, hey, here's the percentage, whatever you guys charge, bill this guy directly and then give me my money right away up front. Is that what you guys kind of do, basically, like that?
Yeah, we have two options actually. So you can just have us do that, and then are you saying you're a broker in this scenario?
No.
Yeah. So say I'm a broker. No, I am a broker.
We can do either way.
Yeah.
Oh, okay. But in this scenario, you were actually a trucking company going directly to the shipper.
Yeah. Yeah. I was a trucker.
That's same thing. So if it's I'll just go through all three cases. Like if you're a trucking company, that's correct. Here's the rate. We buy it. We collect it. We pay you the next day. If you're a broker, you have two options with us from a high level. You can just have us pay your carrier. So that carrier might want to get paid probably no longer than 30 days, right? And you're going to need to pay them at least that fast, so your credit's going to sink and you're not going to be able to book freight with other carriers. So you can say, hey, I don't need my margin. You can get me my margin when you guys finally get paid on day like 60 or 90 by the shipper. But I need you to pay my carrier right away. So then we will pay the carrier 1 day, 7 day, whatever speed you want. We actually don't we try not to let brokers pay them any slower than 30 days because, as you know, by the time that the thing even gets in the system, it's probably been at least 2 days. Sometimes it is. Sometimes it's faster, depending on how fast they get the data in. But the idea is to get the carrier paid. And in most cases, the carrier will accept some fee or some small discount for the quick pay on their side. So hypothetically, if you're a broker and you go with that option, the program can be entirely free to you as a broker because you can pass it all on as a quick pay fee, right? And that's something that I know no one's doing. So that's flexible option number one as a broker. Option two is you have the flexibility down to a load by load basis if you want, or you can have it default just on all the time. You just want the cash flow to get your broker margin within 1 day. So basically pay the carrier whenever the carrier wants to get paid, but pay me today, my margin, right? Now we'll charge you a discount, but only on your margin. It basically works out to be a percentage of your broker margin. So that effective cost of the factoring program is typically like half of what it would be of like of a few other broker factoring services out there, right? Because what we're trying to do is price in our risk and make a little bit money on the time it's out there. Where most trade finance companies are just trying to get as much of a return as fast as possible. So we're really looking at trying to scale it. So yeah, you can just wait for your margin because like I don't need my margin to the carrier get paid. But if you want your cash flow faster, you can just switch the toggle on that transaction or a set of transactions, and we'll advance your margin in 1 day.
Steve, about the risk, how do you evaluate risk? Because I know you said you had some tech to evaluate risk, credit scores, etc. And then the second thing is, don't you have a contract with the broker carrier that if, for example, the shipper goes bankrupt or doesn't pay out, or the broker, for example, that you don't like, you're not responsible for that, you could still collect that back? So technically, you don't have a risk.
Question. Right, great question. So we are so let me answer that question first, and we'll circle back. Might need to refresh me on the other one. So we do not have recourse on credit. So we are true non-recourse from a credit standpoint. So
what does that mean? I'm sorry.
If we approve a company for credit that you want to factor their invoices with us, and they have credit issues or they go bankrupt, that's not something we will charge back to you. That's on the house.
So you take that risk.
We take that risk.
Oh wow.
Yeah, and we're trying to get better at communicating that more visibly, but no BS. We've done it. We've eaten some invoices. We've eaten some balances before, and that's why we really got to depend on that software and the process, like our proprietary process and software, right? Because tracks all these things, kind of flags certain things, and things start to look like they could be going sideways with a particular company. So we need to like wind down our credit maybe for that company, or either limit it or maybe even decline them outright. And some of the friction does come from time to time where, we have to shut somebody off, and maybe that broker, that carrier or broker just picked up a load, or just got tendered a load, right? And they wanted to take the load because the margin was good or whatever. And we're like, as soon as we switch it off, or switch someone off or limit credit, we send email alerts, push notifications in the app, or we try to get it out there as fast as we can. But it's also, to protect them. I mean, we do have clients that will say, hey, I want to still work with this company. And what we do is we do account by account releases. So they were like, okay, cool. You want to work with them? If you really want to take the risk, we don't recommend it, but you can just go work with them direct, and you can just continue to factor or use our payment service for other clients that you have, other companies that you service. So maximum amount of flexibility. Well, we're mitigating our risk, trying to mitigate the customers. That's really what we're trying to do.
Okay.
So that's
cool.
Not true non-recourse on the credit side. We don't do automatic chargebacks. We don't have any additional interest fees after a certain point in time. So if if you have a broker that's just not paying back on an invoice and it's credit related issue, we're not going to assess you any additional interest or charge it back.
So it's a lot.
Even if it's not a credit issue, we're still not going to. We just don't do extra interest. Like when we buy it at that discount rate, that's our revenue recognition. That's it. That's what we made on the transaction.
Well, that's a lot different than like all the other large companies out there that have like an imprint.
Most of the traditional incumbents, they operate more like a traditional lending company, right? They're trying to make a certain yield on that balance sheet of paper that they're lending against, basically. Like, we're really trying to move more towards like this. And here's the funny thing. Historically, our loss rates, like from like bad debt, is actually a lot better than those type of businesses, which
Is it a tech?
kind of shows you that you can actually provide a better service and use technology and also kind of protect yourself as a business at the same time.
So these shippers, how do they usually, like, how do you get the money out of them? Do they usually send literally checks to you, physical checks, or do they actually deposit into your accounts? Like most of them, like say, what percentage would you say actually send you a check? Hey, go open up this check and deposit into your account?
I think shippers right now is, I think I know it's definitely still close to like 50%, but we have had 50%. We have had a lot of success with getting more and more of them over to ACH. It's usually the smaller shippers that are likely to send checks in, right? They're usually the ones who are going to send checks in. But like if we go up in size, we're getting a lot better uptake, like close to 60-70% are starting to use ACH. And we're
makes
trying
it
to
a little bit easier.
Yeah, we want to make it as easy as possible for them too, right? So we're trying to work on extending the product so that it just makes it a lot easier for the shipper to pay their invoices. But I think the big takeaway for our customers is, once you hit the button on the transaction, if the money is left our account, it's your money. The only case when we'll come back to you is you upload like a receipt from McDonald's instead of a POD, and somehow our software doesn't catch it, right? And then we go to bill it, which is rare, but right, something like that happens.
Has it happened?
It's like, not that exact case, but we had cases like that.
Can you imagine? That'd be so funny. You just literally send it straight to the shipper, like, yo, and he's like, why am I looking at a McDonald's receipt?
I have seen like people upload like I think one time it was like a picture of like I can't remember what it was like. It was like a flyer for like a truck show or something. Like, so like they just snapped the picture the wrong POD and then they send it off to the shipper. So through us. So those are the cases where it's like, hey, we'll on most time we will catch that through our software, but in the cases where something slips through, like that's really the handshake between us and the customer, is like, hey, give us everything that you would need to bill your customer up front and make sure it's legit. And we really shouldn't have any problems after that.
Okay.
I have a question about, like, what do you do when a shipper doesn't pay, doesn't pay the bills? Like, do you have like some legal process? And do you have any like kind of crazy story around that you could maybe tell us, like, about how maybe you resolved it or you ended up just
show
losing
up to
money?
the door knocking? Where's my money?
Okay, yes,
where's my money at?
So, right. Well, I mean, we have such good relationship with some of our brokers that we've had brokers offer to go buy people's business. Be like, I'll go help you guys get that money. It's like no, it's okay. Just we'll handle it. So yeah, I mean,
we'd rather take the loss.
We want you to stay in business. We don't want you to get arrested. We want you to build your business with us, right? So no, I mean, like there's some cases where, I guess the short answer is most cases we're able to resolve it through our accounts receivable and collection process. In some rare cases, you'll have, again, it's usually more obscure shippers or smaller shippers that were kind of on the borderline of failing or something. And that also is something we're kind of also trying to get better at adjusting and adapting in the future, is how we can catch some of those things faster. But what usually will happen is it will, we do have like a couple different smaller or specialty law firms that do collections. I think one of them is specifically custom transportation. So we will, hand off some of that to them if we're sure, like we're like absolutely tried everything, we're not going to get paid, just because they're going to take a share of that too, right?
How successful have they been, the law firms?
I don't have statistics in front of me, but we had a few, I guess, anecdotally, we've had a few where I was absolutely thinking like, this is gone. Like, it's a write-off. I think we actually did write it off. And then like 6 months later, we get a check.
They come with the check.
Yeah. And we're like, this is awesome. So it is like, it's probably case by case. But I mean, like, a lot of finance companies, a lot of companies that do factoring and some of the new startups that are doing, I would assume factor in a certain loss rate as just part of running the business. And our threshold is just a little bit lower. But that doesn't mean that I think an important thing to note here, that doesn't mean that another company, especially like the shipper broker scenario, is going to approve and extend credit, even though maybe they are recourse terms. I think that's another misconception. So if you are evaluating like a broker factoring arrangement, dig in a lot on, how they make the credit decisions, and try to get as many of your customers pre-approved before you make your decision. Like what we do a lot for brokers who are more established is like, send us everyone you're already working with, and even some ones that you want to plan to work with. And we'll actually eat it a little bit on the cost to run some of those through, but at least we can say like, hey, this is what we can offer up front for the credit lines for all these customers. And you don't get blindsided, and B, what we've found in most cases is we do the same, if not better, limits with almost the same approval percentages, but you don't have to worry about the chargebacks that like automatically happening where you have to pay the invoice yourself after like 60 or 90 days. So just something to also keep in mind.
Yeah, that's kind of what the question I had. So you do kind of run before you actually do, build a shipper, you do run some credits, or you do some kind of like you check who the shipper is, right? And if they pay or not. How do you do that? How do you find? Do you literally just go and like find, hey, what does this? I mean, how do you even find out?
On top of that, before you go, Steve, like, do you have like different percentage rates depending on like the risk that you're taking on that shipper? Like if it's a riskier bet, do you charge more to the broker?
So we do that. We do have what we call debtor specific rates. And it's a special kind of project case where we've only been doing it in a handful of cases for brokers lately. Just because it's easier to just stick to, the base rate. And if let's say they have like one customer and they're just they're move like 80% of the freight through us that we're going to factor is going to be with this one customer and they pay slower, then we'll try to figure out some kind of days to pay adjusted rate for that specific debtor or specific shipper in our business. So that's kind of how we try to handle those cases. We're trying to come up with other creative solutions. Like some people don't want to have it on the discount side. Some people want to get charged additional interest, and they're going to like help us collect the invoices. So now you're moving more towards more of like traditional recourse factoring, where they want to be more involved in that transaction. So, but yeah, I think the short answer is like we will typically figure out a way to make it work. And we treat every one of those engagements kind of on a case-by-case basis, but the software will support it.
Okay, and then Bob was talking about like how do you like get that data? You just look at credit scores, because I know like
so we every business credit agency you guys can think of we're subscribed to, and then we've got and then we've got some transportation related, like multiple different platforms we're subscribed to. We check a lot around like lien filings, and we'll even check that sometimes if we need to, for like if a shipper wants, like another thing that comes up is a shipper will say, hey, I want to work with this broker, and we'll say, well, it's hard for us to find any information on you, right? So what would a credit department do at a big freight brokerage, right? Well, like when I was at Robinson, right? Chicago Central back then was like the hub branch for all the credit decisions. And so they'd say, go ask the customer for audited financial statements. So they don't have that, give us like the financial statements that have been reviewed, signed off by an accountant. So we've had a few cases where we've gone down the rabbit hole to try to get comfortable with some initial amount of credit. And then, it's kind of like training wheels, right? If they pay those invoices well, then, just like, and which is probably very similar to how a lot of the bigger, the really sophisticated publicly traded freight brokers and 3PLs, I'm sure their credit departments work in a similar way in those cases. Because it's hard to say no outright to a shipper, but you also you want to give them enough rope to prove that they're worth it, but also not so much that it wipes out a bunch of
Totally.
revenue.
Have you
just
seen
earn
like
that
outright where
period.
somebody is like where a shipper is literally trying to scam a broker or scam a carrier? Like for example, like the I mean, I don't know, like have you seen anything like that where a shipper is just like, yo, I'm gonna ship this with them and just not pay them and go with a different broker next week or next have you seen this or no?
I have seen an excuse for not paying the invoice, some obscure like thing that was like barely legible on the bill of lading or something as an instruction be used as like a reason like that they don't want to pay an invoice, right?
Oh,
When
really? It was like,
I actually I'm trying to remember the case right off the top of my head, but I don't even know it was actually documented. It was like, oh, we sent an email, and the email to the broker said like that they needed to use this equipment in this way, but it was like a very specific way you could have interpreted what they asked them to do in the email, and that like because of that we don't want to pay these invoices. So it's like, and we don't know, like there's been a few cases like something more similar like that where it's like we couldn't really it was hard to tell whether or not they were really truly being dishonest or they were
yeah.
trying to use that as an excuse because now they're having financial difficulties. So
So when
and
you
it's
do find somebody like that, so
yeah,
you
every
obviously
once
red
in a
flag
while.
him. So you red flag him in your system. Do you go anywhere else and like, red flag him there? Like say you leave a bad review or like that way other people know not to maybe or be cautious with this shipper or no?
Yeah, so we'll typically like we'll definitely set them to decline, right, in our system,
Yeah.
and put notes in our system and all that fun stuff. And then yeah, as far as third parties, depending on how like we try to be careful that if it's not if it like we try not to badmouth people unless we're pretty darn sure. I guess that's the way to say it,
Yeah.
right?
Yeah.
So
Yeah.
if we're,
Makes sense.
like a bit like a, I mean, an erroneous freight guard report can be really brutal on a
Mhm.
legit brokerage, right? There are bad list fake ones out there too sometimes. Like most of the
Mhm.
time,
Right.
seems like most of them are usually legit, but um, we've actually looked at that with some brokers in the past that were who were sort of carrier factoring, right? Where like we saw a couple of freight guards and we would we went down the wild goose chase because like everything else was pointing to the company being completely fine, and come to find out, it was an erroneous, freight guard. It ended up coming down the next day. So I think as an industry, we could do even better with that. But honestly, like as an industry, we're probably doing a lot better than a lot of other industries, at least having
Yeah.
a way to sound off to each other and be like, hey, warning, like be careful with this group, at least do some extra homework.
Sure.
Hmm.
Uh,
That's awesome. Yeah.
Steve, do you do any financing for trucking companies or brokerages? Because I know Bob's looking to buy some trucks.
Not just me, but 90% of the other carriers are looking to finance probably stuff.
A guy who used to be on our board is a good friend of mine, an advisor. He runs a really good equipment finance company that we have a partnership relationship with. And
Oh,
then we have
nice.
another network of lenders um, that we're not as close with, but I'm pretty close with the people who are the lender brokers for that group, and that's kind of
Yeah.
like a backup source of capital. And with both of those groups, we have agreements so that if we're factoring with a client who wants to or gets approved for a loan, that they'll back off the receivables, because that's really what we care about, is just the invoices, right? So they'll
Hmm.
take a lien typically if it's like a lease or an equipment purchase on the assets, and they might want other assets in their lien. But at the end of the day, really what we care about most, and oftentimes we'll subordinate or even like eliminate from our security agreement, or other things, just so we have access to the accounts receivable or the invoices. That's all really what we care about at the end of the day.
That's really good intel for
Okay.
Bob.
Yeah.
Yeah, and also Bob, just look at those liens on the security agreements, because if the security agreement may say they have everything including your kitchen sink in there, but then look at the way they actually fulfill and process the UCC document too, because security agreement could have all those rights, and they could put the UCC lien in, just on like or put it on everything, and you might want to ask to have it only against certain assets. And if you really want to be careful with it, you may want to have the security agreement amended so it only declares certain assets. We do a blanket language in our security agreement, but then we usually, if the client requests it, we'll oftentimes only file on just the assets we need. So that just makes it easier for them to get an equipment loan or do some kind of other financing if they need.
Yeah, I haven't really went through a process like that through like a factoring type of way, but we usually just go through a bank or like big BMO or something like that, more traditional, I guess. But that's what we've been doing. So
that's fine. Yeah, I mean, so curious. Are you working with a bank and RTS?
Yeah.
Okay, so then the bank and RTS will probably have had some interaction at some point. So that RTS
I don't really even I don't know if they do, because our bank they just I
because
wonder.
the bank might be a little, but just double check.
Oh, I see. So if we don't pay the bank, they would just RTS would directly pay the bank? Maybe. Yeah.
They might, yeah. It depends on who's in first position. So the bank probably has a blanket lien on your equipment for sure, and probably some other assets. It's possible that they didn't file any kind of lien or the security agreement that supports the UCC filing doesn't define like your invoices, and then RTS is like, oh well, the invoices are free, we can still operate with just the invoices. But yeah, for anybody out there doing any kind of factoring or financing deal, just read those security agreements. Look for any hidden chargebacks or any special reserve requirements that are going to hold up too much of your cash. And just make sure
I'm definitely learning a lot about this stuff, because when I first started, I did not know anything how this worked. So now I'm just like, I know kind of at least a little bit more about it. So
Steve, knowing what you know, like, because you're obviously a smart guy and you know a lot about this topic, how would you scale a trucking company when you depend on loans or financing to buy equipment? What would your go-to be on that?
I would try to find the best equipment financing rates I could, and I try to find equipment financing companies, or vice versa, factoring companies. I would pair the two things up, so I could finance my equipment without the collateral being my invoices being leveraged as collateral for those equipment purchases we're financing, and then use a good factoring company to finance my liquid cash flow, my speed of cash flow through my receivables at the best rate I could, that isn't interfering with the equipment. So I've kind of separated my collateral, like, okay, my invoices and my freight bills and the stuff where I'm getting the cash flow from is separate and doesn't have a lien applied against it from the equipment company. Most equipment finance companies will be okay with that in my experience, because they want you to get the fast cash flow possible. And if the terms from the factor are really good, like we've had pretty good luck because we're so strong on the non-recourse angle, where there's little risk of like a chargeback or bad debt coming back to hurt the carrier, that they get more comfortable with those kind of factoring companies, right? Because it's like, hey, we're kind of shielding your lending client for the equipment from some of that credit risk, as it is just how we operate. And we just want rights to finance the receivables, but you guys can take the other stuff as your collateral. And then you kind of get a little bit of the best of both worlds. But yeah, definitely, that's the way I think I would do it. Now, as you get larger, the rates for factoring, like significantly larger, like hundreds and hundreds of units, let's say, or something like maybe 150 plus, factoring rates are probably not going to be the best way to go. So you may want to actually, move on to some kind of bank financing, or find someone who can supply something more like an asset-based loan, where and then
find an investor.
Find an investor, yeah. But
that's what I kind of wanted to talk to you about. I don't know if you have the time for it, because I feel like
I've got another 20 minutes if you guys want to keep going. 15, 20
Let's do it. No, this is cool. I'm loving this conversation.
I mean, I just love trying to help other freaking entrepreneurs too, guys. So
that's literally why we started this podcast, because we want people to see every side of the business, and kind of the people that actually listen to it, so they can have ideas. Because every time I listen to somebody like you or David or anybody that we had, I feel like my brain opens up a little bit more every time.
I learned so much.
There's so many angles. Like, dude, honestly, if you guys ask me, like, what was it? It's been like almost 7 years. Like, hey, we new factoring or finance, or like, man, I know so much about this stuff now, and I'm so comfortable.
And that's
but
why, right? And
yeah,
that's
it's been
why
a
I kind
deep
of
dive.
wanted to like break it down in simple form because you know much about it. But I feel like for a person like me or somebody that might be
Sure.
watching it, I feel like some people are just like so new to this that they don't even know
Yeah.
what it is. You
And
know, it's
stop me
they
if
just need
I'm
to be broke.
using too much lingo, but yeah, but your collateral
Yeah,
is really what you're putting up for the bank to feel comfortable giving you money, lending you money.
yeah. But like, so I had a question kind of about. I mean, I've heard this before. Like, you can never get. I think Paul. I don't know if I talked to you, but it's hard to find investors to invest in a trucking company. So right
Yeah,
now
we were
we're
talking about that
trying to
yesterday.
grow. We're trying. Yeah, we're like I feel like our company's trying to go, and I would not mind like selling, 10% of my company or to like an investor
Sure.
or like not. I guess I don't know how it would work, selling it or whatever. But like, how do you do that, or how did you? Well, I guess you had a thing where they came to you, right?
Yeah,
But
so
like, say
well,
if somebody
so
wanted to do
so
it,
well, so I guess here's what I would say. I think I know where you're going with. I mean, for like asset-based carrier, I do not know as much about that. I've been closer to brokerages that are starting up and financing, some of them even switching over to fashion themselves as digital brokers now and going to raise money to be like
yeah,
the convoy of like just this part of Ohio and this equipment type, right?
right,
Because that's how big the market is, right? You can probably
yeah.
actually do that, right? So so I've seen more of that. I mean, I think anytime you're going to bring in a partner like in an asset heavy business, I would just make sure that they're um that your interests are aligned like really heavily, because I think when you get a lot
Mhm.
more heavy assets, there's a lot more on the line. Like typically those lien security agreements are going to have more teeth in them, like to get those assets back from you if like you're not able to
Something
pay
goes
for one
wrong.
of those. Yeah, exactly right.
Yeah,
So you want a partner that's going to be, understand that especially understanding the cyclical nature of our industry. Like I'll
right. That's
even
a big
raising
thing.
money for what effectively is a software, a finance plus software kind of company like fintech. You know, I've talked to a lot of different investors, and it's still like there's still a smaller percentage of even VCs or tech investors that really know what how the freight industry goes through these different cycles, right? So you kind of have to
Can you tell
remind
us?
them about,
Yeah.
hey, this is normal. It goes like this, right?
Yeah,
So or
they're
this
also
is
new
this
to
is
it.
or there's
Yeah.
a lot of them that are new to it. So like yeah,
Yeah,
especially the last 5 years, right? So
yeah.
so it's really just getting them, if they are new to it, try to get them to do more research, provide them with materials, try to get them up to speed as much as you can, and give them the bad news first, right? As fast as you can. Be like,
Yeah.
here's the most difficult things of running this type of business, but here's why I think we're gonna, succeed. And
So
that's
how did you
I try to
guys
be really
manage to
honest
raise?
about that.
Yeah, how did you guys manage to raise money? And if you can go into more details, how much you guys raised and like why'd you guys raise the money? If you can go a little bit more into details, because I feel like a lot of people would be interested in that if you have time for it.
Yeah, just a little high level. So we've raised uh, a lot of our investor capital from tech investors, from early stage tech investors, um, that have participated in mostly in like business to business software platforms and stuff
Hmm.
like that. So and we do have angel investors who have been like in the equipment leasing and finance business for trucking, or have done specific things on trucking finance, which is great because then those are partners that you can bounce stuff off of. When you're either going through a challenge
Yeah,
or maybe you're in an uncharted territory, they're like, hey, I know this guy who worked for my business. I'll connect you with this guy, this
all
attorney or
about
this
connections.
advisor. Yeah, so there's strategic investors that may even be angel investors that just really know a lot of people that can help. Just by that is going to like smooth out a lot of the rough spots as we go along the path. And then there's just more like institutional, I would categorize it, where a lot of them will fashion themselves as they're going to provide a lot of value, and sometimes they do. But my experience, they usually provide a lot more value in knowing other larger and other investors than maybe having like the industry know-how. So I think we've done a good job of getting a good mix, and
Uh-huh.
without getting too diluted. But yeah, and we have our own, financial line of capital, which is a different type of bank partnered with investment group. And that's how we do the invoice financing effectively is through that
Yeah.
type of capital. So that's
Nice.
basically what we're doing, and we'll probably raise some more, but the goal is to try to I mean, most founders, you only want to raise as much as you really need to, but some
Yeah.
businesses also require more capital than others too. It depends on the business.
Yeah, I feel like for the factoring side, you definitely need capital in the beginning to make it work, you definitely
Always.
do, because how would you pay, like it doesn't even
Yeah.
make sense without it.
Yep.
Okay.
Yep. So that it just depends, right? And also on that note, like we have a capability that we recently just probably worth announcing here for brokers that don't need or want factoring. We also have basically a product, a feature inside a Haul Pay where you can use your own finances basically. So like if you have your own bank line or you have your own financing already and you want to use the
Oh, wow.
benefits of like automated invoicing, automating the payables,
That's cool.
the collections process, like all
I
the
was gonna
stuff that
ask you
we
about
already,
that.
yeah, all the stuff that we've proven so we can keep our losses low and all the stuff that works for us when we're factoring and using our
Yeah.
money to make money. If you're a broker and you have your own line of capital yourselves already, but you want to get all the benefits of that without the financing, we have a flavor of the program now.
So
Oh,
for
wow.
you
That's
too.
awesome.
they're just paying to use your technology.
Yes, yeah. So we do like we just went to market the pricing, but basically it's more like a software model than it
Mhm.
is
Sure.
the factoring model, and unlocks that because we kept demoing the groups that were like, hey, this is awesome, but like we don't want factoring, we don't need factoring, or we just got $1 million investment, or we just got a big line of capital from a bank, and then
Yeah.
some brokers out there are like, hey, I don't want anyone to even talk to my shippers ever. They're like very, very paranoid, which
Yeah.
depending on who your shippers are, you may make sense, depending on who your financial partners are, what platforms you're talking to, you may not want them knowing how to get in touch with their shippers. So we've actually made that product extension now, where we could just do the payable or do the receivable and do the whole digital process without you needing to use the factoring. So that's pretty cool.
Well,
Nice.
So like I said, maybe at the
Okay.
beginning, where we were saying eventually the vision was to get to more of a payments platform and then credit decisioning and all that stuff. So we effectively have gotten to that payment solution part. And like for us, the future, we're just looking at continuing to kind of support the supply chain, through the platform and the free software that we kind of throw in behind the
Yeah.
payments and the factoring stuff.
That's awesome. Well, we're kind of running out of time, but I want to ask some questions because we had a lot of questions that kind of came in. If you don't mind, Paul, you want to run through some questions? Is that cool?
Yeah,
Steve,
let's
is
do
that
it.
cool too?
I got them all printed out here. So
Okay, yeah, let me we can do rapid fire. I'm just gonna tell someone that I might be 5 minutes late to my next meeting, and we should be good.
Because you have to be done 30 after, right, Steve? 30 after, or
we're like, I can push this back like 5 minutes. So
okay.
you think you can try to rapid fire?
Yeah,
like,
we'll just ask a few questions.
Yeah. Well, there's one question here from
I hope you don't ask the question that I want to ask.
Oh wait, you go first. Go first.
Why don't you go first so we just get it handled?
Yeah, let's do it.
Okay, so my old boss literally wrote on there that I used to write for. He's like, "How much for the shipper list?" I know you probably don't want to answer this, but like, you can't do that, right? You can't sell the shipper list to anybody. I'm guessing, right? Like
we don't do that. We have, I mean, we have. I'd have to talk to our our head of sales, but we have had other things that we've done recently, and we're trying to do more of, where we're trying to give brokers effectively shipper lists, trying to see if we can resell stuff. A lot of it's publicly available that we would have to resell.
That way you have like a funnel, or like people can go to like, here's a bunch of shippers. Yeah. And they're rated.
Yeah. It's stuff where like we're partnered with a data company, and we share that to the brokers, and it's all kosher because it's, however they got the data is legit. So
okay, cool.
But we don't take data from our debtors, which are effectively all the shippers and brokers, stuff like that, and then make it accessible to other clients. For example, right, if you're a broker, you probably don't want someone to just be able to like, search a region or something and find your customer. It's got to be a credit related connection you're making, because you want to actually transact with that company to make that connection in our system.
That's actually pretty interesting, because I'm actually launching an application in the next couple of weeks called shippercrm.com, where we also have that kind of, where it's like we have a CRM, but we also have a tool where you could request data. And this is all like whatever CRM, like whatever customer you put into the CRM, that's all private. And then we collect data from a different source and we sell that data too. So it's like, it's totally important to be transparent in that, because like people will be like, where'd you get this data? Did you get it from my customer?
Yeah, transparent. And we take our broker clients' privacy, all our clients' privacy really seriously. And even in our software, like even down to the exact way they want us to bill, like I was saying earlier, and how much they want to be involved in the billing, and like all of that's got to built into the system. So including, how private we are with any data they provide into the system for credit or something like that. But one thing I will say is that we're hoping to get some more, push some more on our load board again later this year, and start getting more shipper freight posted back on a load board, which is kind of where we started this whole party.
Sure.
That's a good idea, because DAT is getting way too expensive. Honestly, I'm gonna shoot my shot. They got to bring my price down, because I'm sick and tired of paying.
We'll be working on that soon.
So Steve, this is kind of part of this question is from a user, and then I'm gonna build on top of that. So this is from cat_Kish. Is the market really crashing? And then on top of that, I'm wondering, like, knowing what you know, how would you go about like operating a trucking company so that you're running profitably? Since, as we all know, a lot of companies are going out of business right now, especially in the trucking industry. What would you do differently to be profitable?
Yeah, so I think this goes across for brokers and carriers, but I would say know your customer is probably the number one, and also what the type of customers, right? So just think common sense, right? If there's economic uncertainty, what are the things that are going to keep moving, right? What kind of freight is still going to be there? Right, exactly. What commodities are moving? If they're commodities, or if it's specialty freight, find out like, hey, is that a government contract? Is it, what does it tie back to? There's certain things that are just not going to be affected. When I started my career, it was 08, right? So I remember Robinson, there was a good like 12 or like 8 or 9, almost 12 months where, it was definitely a little nail bitey, but shippers started to come back in line. Things started to move again as we got deeper into 2009. Certain other industries were slower longer, but freight was more or less coming back pretty quickly after about a year or so, right? So
sure.
This is a really wacky economic environment. We have certain sectors that are doing well, certain other ones are just doing awful. Tech is just, laying people off, to lay people off, and that creates a chain reaction of more layoffs, and that creates a downfall in like consumer sentiment just across the board. So it's like, which then you could become a self-fulfilling prophecy almost, right? So there's a lot of funkiness in the whole macro economy right now. So again, just in general, know your customer, try to focus on knowing if the upstream, whoever's really paying for that, whether you're moving for a broker or shipper, is tied into some industry that's less likely to get wiped out if economic conditions worsen and persist for a longer period of time. So I think is my number one advice.
Sure.
I think that's number one.
Would you can I ask another quick question?
Okay, sorry.
If you can.
No.
So directly, Bob, you got to go more directly to the customer. You have to do that.
We need to hire. Depends on what the commodity is and what the product is, but I mean, like, it just depends on that. Depends on also if the broker is really good and you've got a good relationship with him and they're a major company, you're probably in a pretty good place too. But also but another comment on that is diversification, right? Diversify.
Yeah, and most brokers will take the cheaper truck out there, so they don't even care because they're struggling too, So it's kind of hard right now. But another question, if you can't answer this, do you know what the average profit margin is? Or could you say that, like, just an average? It doesn't have to be
Oh,
specific. What
so
the
yeah,
shippers pay
averages,
and
well,
what the
just
brokers get?
yeah, so averages are fluctuating. I mean, I think we've definitely seen some compression in the margins, but I would say, we're seeing close to 7-10% on a good day
So
in
it's not
most
what
cases.
everybody's commenting. Brokers are making 50% profit
That's
margins.
what
This
every
is
No,
dispatcher and trucking
I
company
don't.
thinks.
No, I can definitely say that we have not seen anybody. No,
yeah.
no, no,
It's like
no.
once in a blue
It's
moon, it makes sense, but it's
Yeah,
not
maybe.
something.
Well, here's one other thing I'll say. There's also brokers that take it on the nose too. Like they take it in the
Exactly.
Oh
shorts
yeah.
where just to keep their
Mm-hmm.
Yeah.
customer happy. And we actually account for that. Like we have a way in our software where like if you have to do a certain number of negative margin loads, we set thresholds because that's just something that sometimes brokers have to do
Yeah.
to satisfy their customers. So
Sure.
they may move 3 or 4 loads and one of the loads wipes out the other 3.
Yeah.
Yeah.
Because
I
otherwise
mean,
they lose the customer, right? So
we had to
yeah.
take it today too. I literally deadheaded a truck 250 miles today because I'm like, there's no way I'm hauling a cheap load. Dead ass. I'm like, I'm not hauling this cheap load because as soon as I do, the brokers will think this is normal. The customers, the shippers will think this is normal. So I'm like, I literally
Where
deadheaded
was
the
that
driver home
from?
250. It was Albany, New York, going to Rochester, New York.
Gotcha.
Got it.
I was like, it was like 250 miles. He was a little bit east of Albany. I'm like, there's no way I'm gonna take a $450 load. It will cover my fuel, it will cover the tolls, but I'm like, it just doesn't make any sense. He'll waste the whole
Sure.
day. Plus, I'm like, now the brokers will know that's normal to book that kind of load. So yeah,
Oh,
cool.
Cool.
this
This
is
was
great.
great. This was
You
actually
guys
very
anything
great.
else? I already carved this out for 4 minutes. You guys good? We good?
Let's keep going.
Got a couple more you want to fire? I'll try to be quick. If you want to do a couple more rapid fire, we'll.
Why are the rates so bad? That's like something that's not really.
Yeah, on the trucking market in general, like a lot of the stuff I've been sitting in from like an analyst perspective, like from a few of the big trading companies and freight waves and everything else in
Mhm.
between.
Yeah.
A lot of people
there was
think
a
we're
lot.
kind of bouncing off the bottom,
Yeah,
but I
yeah.
mean, just because produce season is coming up, so they're like it's kind of more hope, but I'll take it. I think everybody's kind of felt it,
Do
the
you
last
see a brighter
3 or
future
4
though? Do you
months.
see the market turning around this year? Like just from the shipper side or
It's hard to say. I would just, yeah, I mean, like, I would just err on the side of worst case scenario. I honestly, I don't think we're really gonna know until we get deeper into the second quarter. I think like we're
yeah.
gonna have enough strong signals to be like, okay, we're getting some like seasonality is kind of going back to some kind of normal seasonality,
Mhm.
normal-ish, right? Because like
Yeah.
Q4 was just like, okay, like we're correcting back from pandemic stuff and peak season was weak. So it's hard when coming out of that to really make
So I
the
should
calls.
probably not buy any more equipment until quarter two.
Well,
That's
that's
probably
actually a good
idea.
question. Steve, would you be buying more equipment right now?
No, I wouldn't. I mean, I'm not an asset-based carrier guy, but I would
Sure.
probably be unless you had contracted rates with
Yeah. Which we don't.
I would try to get stuff under contract, or figure out or make sure you've got some like crazy flexible equipment finance or lease terms where it's like you can just,
Yeah.
hey, I don't need it anymore. Like
Only thing that's
Yeah.
saving us is
So-
we have really low overhead cost, like office overhead cost. I don't pay myself.
like maybe it's
dispatchers, like my
maybe it's rentals to like pick up the surge and then have
Yeah.
your equipment leasing company lined up. So like if it starts to be consistent and you might be able to model that from like a cost standpoint. That could be another thing to think about.
Okay. Cool.
But just keep your assets, like if you're keeping everything busy consistently and your margins are okay, try to keep it. I would
as low as
I think
possible for now.
we're gonna know a lot more, I think, in the freight market as we get through March about what the rest of the year is gonna look like, from what I can tell.
Yeah.
But
Question, do you read?
but live your dream too. Don't just take my advice.
Yeah.
But
Go ahead.
not Steve, sorry, Bob, you should leverage your Instagram to get shippers working directly. I feel like you have shippers that follow you that will pay you extra just because you're USA transportation.
I don't think I have shippers.
You
I
have
don't think I
shippers.
have
Yeah,
that many
dude.
shippers. I have a lot
I
of
have
brokers,
shippers.
and
I have shippers.
then you got to leverage for.
It's
You
like
gotta-
it's probably like 1% of your audience, maybe 2,
Yeah.
but they're there. And honestly, even the brokers that do follow you will pay you more. If I was a broker
I know
and I
they
knew,
do, and they
exactly.
do. They do.
You gotta
Some of
leverage
them
that.
do reach out, and they're really great. Yeah,
You
no,
should
for
just-
sure. I mean,
yeah.
I had a guy. I've had a guy. When we talked about on the last podcast.
Yeah.
He reached out and paid a lot more. Before you go, do you, Steve? Do you read any books?
Yeah, I do. I mean, I've been reading a lot of business books, and just like it's like some of I mean, I think I just read like Goggins' book recently. Was
Okay.
Extreme Ownership. Got that one.
What is it called?
Extreme Ownership. It's from Goggins, the ex-Navy SEAL.
Crazy
he's been on
guy.
Joe Rogan.
Yeah, he runs like
Yeah,
100 miles.
Oh,
Yeah,
okay.
I mean,
Yeah, I know
like,
what you're talking
yeah,
about.
I mean, I honestly lately I've been like glued to like financial press and like all these dry CEO like things that you just like, because at a certain point, like I've got to shut my brain off, or like I'll just get
Yeah.
sick of what I'm doing, right? So it's
Yeah.
kind of a balance between like business book, a little bit of financial news, and like all right, I'm gonna watch a movie with my girlfriend and just take a break from this stuff.
Sure. You
Yeah.
should subscribe to the FreightCaviar email newsletter on freightcaviar.com. It's
For
it's
sure.
not dry, but it's educational information on the freight market and the industry.
Yeah, no, good call, dude. Will do.
Just
I
gonna
actually
plug
read one of
myself
your
in there.
articles today about somebody going to jail. I actually read I think it came out today that you said that somebody was getting.
The guy from
Okay.
Slink.io.
Oh yeah, that sync company. Yeah, that's
Yeah.
crazy.
Yeah.
That's so
Yeah.
crazy.
Yeah.
Yeah, wild.
Steve,
Yeah,
what book would you recommend? A business book, like if you have anything in mind, what kind of book would you recommend for people to read?
It's a book called Good to Great. I just reread
That's
it.
that's what David said, right? David had that
It's a
book.
good one. Good
Yeah,
to Great's a good
I believe
one.
so.
Yeah.
Yeah, and then there's another one. Let me find it. I just read it, which is really good for right now. Actually, it's by the same author. I just finished it.
Yeah, I gotta start reading more because I used to read all these business books, but I kind of get too caught up with other things, and then when I come home, I'm like,
Yeah.
oh, let me just watch a
Dude.
movie or something.
Yeah,
and then,
I do Audible a lot, and like if I'm doing
Yeah.
like
Yeah.
gym or something, I'll try to
Sure.
get through it at Audible. But the other one is right, it was a really good one. How the Mighty Fall, both by Jim Collins. How the Mighty Fall is about basically he does an analysis. A lot of the companies that were in Good to Great were in How the Mighty Fall.
Wow.
And How the Mighty Fall, and analyzes how some of them didn't make it through the last recession. So he does like this this study of each company that made it and which ones didn't, and which principles they did more, and which ones they did less.
That actually sounds very interesting. Yeah.
Yeah, How the
Both
Mighty
books.
Fall is a really good one, because you can learn a lot by watching high performers, but you can learn a lot more sometimes by watching performance, that go through different times.
Sure.
Great.
Wow.
Awesome. Steve, do you have any questions to ask us?
I think Steve's got to go.
Man, I think this was good. I love
amazing.
fun.
Yeah.
Try to just go with it.
Yeah.
I think
before you go, where can people, if people need to reach out to you, what's the best way to reach out to you or get in contact with you?
Sure. Yeah. So I would recommend reaching out to our team if they're interested in any of the technology or the factoring services that we offer. The website, the main company website, is ComFreight.com. So it rhymes. It's just com in front of freight and then .com. And then our payments and factoring service is called HaulPay, like hauling a load, HAUL pay, HaulPay. And if you Google HaulPay or you Google ComFreight, you'll see our website. So you can go there. We've got a bunch of different materials. The blog's pretty healthy now. We're trying to add more quality content every month and every couple weeks. Be happy to share this when we get this all out there too. And yeah, we're just trying to help small mid-sized companies survive and also thrive. And I think we're in a really good position
and get their money faster, huh?
Yeah, maybe even protect them from a lot of risk too.
Yeah,
that's true.
Definitely.
Okay. Do you have LinkedIn? Just for me.
Yeah.
I just want to see if people have. Do you actually use LinkedIn? Because me and Paul would be going back
LinkedIn
and forth
is amazing.
If I should make a LinkedIn or not. Or I mean, I do have it, but if I should.
So I've been asked to be more like active on there, and I think I probably will try to a lot more people get a lot more traction on there. It's funny that I got the first set of users off of LinkedIn, and now I almost never use it. So I'm trying to find a way to get back on there and have a voice on there more often. But I do have a LinkedIn. I post there every once in a while, like maybe twice a month right now.
Okay. Yeah, because Paul has been telling me to get into it, and I'm like, yeah, I will, but never do. So I'm just checking who has it, who doesn't.
Good.
I'm like,
yeah, I mean, it's good. It's just like any other channel. If you can keep it engaged, and if there's a way to maybe even post to multiple at the same time or do it all in time blocks, like that's what I used to do. That's another strategy that works pretty well. So
cool. Okay, sounds good. This was great. Honestly,
fun.
I learned a lot myself.
Yeah, that was awesome.
All right. Yeah.
Yeah.
I think that was a good one.
Thanks for tuning in to the Daily Freight Caviar Podcast. If you enjoyed the podcast, or if you didn't, leave a review. Let me know what you think. I appreciate any feedback. If you'd like to have more Freight Caviar content, go to freightcaviar.com and subscribe to my email newsletter.